Welcome back to Doc Tickers, the show where we help you understand earnings calls. Today we're doing a deep dive into Wendy's Q3 2024 report. And, well, let's just say the move's not exactly celebratory. Their stock is up almost 3% today, which on the surface sounds pretty good. But when you really start digging into the details, it becomes pretty clear that Wendy's, like a lot of restaurants right now, is facing some pretty tough challenges.
Yeah, it is a little bit of a puzzle at first glance.
Right.
The stock's up, but then you look at the numbers, and global system-wide sales only grew by 1.8%, and same restaurant sales are just barely budging at 0.2%. Those numbers definitely missed what analysts were expecting, especially in the U.S., which is making some investors a little jittery.
Yeah, that makes sense. It seems like everyone's feeling the pressure from this uncertain economy. And the competition in the burger world, it's just cutthroat out there. Wendy's managed to hold on to its market share, but it seems like they had to really scrap for every single customer.
Oh, absolutely. You hit the nail on the head there. We're seeing some competitors get really, really aggressive. I mean, some of these deep discount value meals they're offering, it puts a ton of pressure on everyone else to do the same thing, even if it means squeezing their profit margins.
Right, so not exactly a glowing report card then.
Yeah.
But are there any bright spots we can focus on? Anything that gives us some hope?
Oh, absolutely. There are definitely some glimmers of hope here. One of the things that jumped out at me was their performance in the morning and late night departs, late night sales in particular, were up by a very respectable high single-digit percentage.
Okay, that is impressive. What's driving that growth? Is it all those late night Frosties?
Well, I'm sure the Frosties are playing a role, but I think it also shows how powerful delivery and digital ordering have become. People are busier than ever, they're working late, and they want a hot meal without having to cook. Wendy's has done a really good job of tapping into that trend.
Yeah, that makes sense. So late night is looking good. What about their international performance? Any good news there?
Another bright spot for sure. Their international segment saw high single-digit system-wide sales growth, and that's largely driven by new restaurant openings. And get this, Canada's leading the pack, with breakfast traffic up by a whopping high teens percentage.
Wow. Canada, what's the secret sauce up there? Are they putting maple syrup on everything?
Maybe. No, but seriously, it's worth taking a closer look. Canada's economy isn't that different from ours. So it's possible that Wendy's has some region-specific strategies in place, strategies that are really clicking with Canadian consumers. Maybe they've tailored their menu or marketing in a way that's really hitting the mark up north.
Yeah, that's a really good point. It reminds us that sometimes you have to look beyond those top-line numbers and dig into the nuances of each market.
Exactly. And speaking of things that are working well, let's talk about their digital strategy. This is where Wendy's is really knocking it out of the park. Their digital business grew almost 40% year over year, and it's becoming a bigger and bigger piece of their overall sales. Plus, they've now got a massive 45 million rewards members.
Wow, those are some serious numbers. Seems like everyone's ordering through their funds these days.
It's true, you're not wrong. This digital dominance isn't just a Wendy's thing. It's a trend we're seeing across the entire restaurant industry. Consumers want convenience. They want personalized offers. And they want it all right there at their fingertips. Wendy's is clearly investing in the technology and marketing that they need to win in this digital space.
So digital is a definite win for them. But here's a move that might surprise you. Wendy's is actually closing underperforming restaurants. We're talking about locations with average unit volumes, or AUVs, of around $1.1 million in sales per year. It seems kind of counterintuitive, doesn't it? Closing stores when you're trying to grow.
Yeah, it does seem a little strange at first glance,
right?
Especially when growth is already a little sluggish. But Wendy's is spinning this as a way to quote unquote, strengthen their system for the long term. They're basically saying, look, we'd rather have fewer restaurants that are all doing really well than a bunch of locations that are just barely getting by.
So they're sacrificing short-term gains for what they hope will be a more profitable future.
Exactly. It's a classic trade-off. The potential benefits are pretty clear: better locations, higher performing restaurants, and a leaner operation overall. But there are definitely risks too. Will closing restaurants alienate some loyal customers in those areas? Will it hurt their brand image if people start seeing empty Wendy's buildings in their towns?
Those are all valid concerns. We'll have to wait and see how this strengthening strategy plays out. Speaking of things playing out, let's move on to something a little more fun, shall we? Let's talk about their recent menu innovations and marketing campaigns. I mean, you can't talk about Wendy's without talking about their creative side. And that Krabby Patty promotion, well, that was pure genius.
Oh, absolutely. It was brilliant on so many levels. First, it tapped into that wave of nostalgia. for the 25th anniversary of SpongeBob SquarePants. And let's be honest, who doesn't love SpongeBob? But what really impressed me was how they leveraged their core menu items. They didn't try to reinvent the wheel. They took their iconic square patty, their beloved Frosty, and they created something fun and familiar.
It was a really smart move. And it looks like they're keeping that momentum going. They've got the salted caramel Frosty coming out, a new mushroom bacon cheeseburger, and they're launching a national media campaign for their spicy chicken sandwich. Plus, they're rolling out a new tagline, "Gotta be Wendy's," and shifting their marketing to really focus on the food itself.
That's a subtle but important shift. In the past, Wendy's has often relied on humor and personality in their marketing. This new approach feels more mature, more focused on showcasing the quality and deliciousness of their food. It'll be interesting to see if this resonates with consumers, especially in this more challenging economic environment.
It's almost as if they're saying, hey, look, we're not just about sassy tweets and funny commercials anymore. We're about making damn good food.
Ah, exactly. And in a world where everyone's competing for attention, sometimes going back to basics, and highlighting your core product can be the most effective strategy.
Yeah, it's a smart play. Especially when you think about how crowded the fast food market is these days. Everyone's screaming about value and deals and all that. But at the end of the day, it's the food that really matters.
And speaking of things that matter, let's not forget about profitability. Wendy's is taking a multi-pronged approach here.
Right, absolutely.
Yeah.
One area that really stood out to me is their renewed focus on beverages. They've got this new partnership with Coca-Cola, which gives them access to those freestyle machines. You know, the ones with like 100 different drink options?
Oh, yeah. Those freestyle machines are dangerous.
Oh.
I can spend way too much time trying to decide between cherry vanilla Coke Zero and raspberry Sprite. But all jokes aside, it's a smart move by Wendy's. People love those machines. They really do. And it gives Wendy's some cool opportunities to get creative with their drinks in the future. They even hinted at some new drink creations in the pipeline, which could be a fun way to boost sales.
And they're not just relying on fancy machines. They're also getting pretty aggressive with pricing, offering $1 any size drinks right now. That's a tough deal to beat, especially when you're already there for a burger and fries.
Yeah, it's a classic strategy. Drive traffic, increase those average check totals. And from a business standpoint, beverages are a high margin category for restaurants. So it's a win-win for Wendy's.
Makes sense. So we've got late night, international, digital, and beverages all showing some promise. Is there anything else Wendy's is doing to try and boost those profits?
Well, you probably guessed it. Breakfast is still a big focus for them. They're continuing to invest in this day part, and it seems to be slowly but surely gaining some traction.
It's interesting, isn't it? Wendy's got into the breakfast game pretty late compared to some of their competitors, but they've been strategic about it, emphasizing quality ingredients and unique menu items that set them apart. Seems like it's paying off, at least in some markets.
You're right. And their continued growth in breakfast suggests that their approach might be working. But let's be real, breakfast is a notoriously tough market to crack in the fast food world. People are creatures of habit, and it takes a lot to get them to change their morning routine.
Yeah, that's true. I'm definitely guilty of sticking to my same old breakfast order day after day. So Wendy's has their work cut out for them. It's not just about having good breakfast sandwiches. It's about building that awareness and convincing people that Wendy's is a real breakfast destination.
Absolutely. It's about changing perceptions and habits, which takes time, consistency, and a whole lot of marketing.
Speaking of changing things up, let's shift gears for a second and talk about something that's really starting to make waves in the restaurant industry: artificial intelligence. Wendy's is actually testing out AI-powered voice ordering in some of their company-owned restaurants.
It is pretty fascinating. We're seeing more and more restaurants experimenting with AI, and for good reason. AI has the potential to completely change how restaurants operate.
Right.
From taking orders more efficiently to potentially even reducing labor costs.
Yeah, well, part of me wonders if AI is going to take away from that human element that we all love of going out to eat. I mean, part of the Wendy's experience is that friendly interaction with the cashier.
Right.
Is AI going to replace that completely?
That's a valid concern, and it's something we need to be mindful of. As AI becomes more common, the key is to use AI to make the customer experience better, not to replace it altogether. Imagine a world where AI handles all the routine stuff, like taking orders or answering basic questions, which then frees up employees to focus on more complex issues or provide more personalized service.
Okay, that makes sense.
Yeah.
It's all about finding that balance between efficiency and keeping that human touch.
All right, so we've covered a lot of ground here, from late night cravings to Canadian breakfast to the rise of the machines. Let's wrap things up. by taking a look at Wendy's financial outlook for the rest of the year. They've updated their global system-wide sales growth projection to approximately 3% and reaffirmed their adjusted EBITDA guidance.
Now, for those of you who might not be familiar with the term EBITDA, it basically stands for earnings before interest, taxes, depreciation, and amortization. Think of it as a way to measure a company's core profitability, stripping away all the financial jargon. So what Wendy's is saying is that they're still confident in their ability to generate profits, even in this tough economic climate.
That's a good sign.
Right.
Right. They're basically saying, look, we might not be growing as fast as we'd like, but we're still making money.
Exactly. And it's worth noting that they're maintaining their EBITDA guidance despite having to lower their sales growth outlook. This suggests that they're focused on controlling costs and managing their business efficiently, which is probably a good thing, especially when you're closing underperforming restaurants and making big investments in things like digital and breakfast. So what about their plans for using their capital? Are they planning to hoard all that cash? Or are they going to share the wealth with investors?
Well, they've said they're sticking with their current capital allocation policy, which includes continuing to invest in growth opportunities, maintaining a dividend that's attractive to investors, and repurchasing shares when it makes sense.
So they're basically saying, we're going to keep investing in our business, but we're also going to reward our loyal shareholders.
It's a balanced approach that should appeal to a wide range of investors. They're not just focused on growth at all costs. They're also mindful of returning value to their shareholders.
Yeah, it sounds like they're trying to walk that fine line between growth and profitability, which is never easy, especially in this economic climate.
It's a tough balancing act, for sure. And honestly, it's something a lot of companies are dealing with right now, not just in the restaurant industry. How do you keep growing and innovating while also keeping an eye on the bottom line? It's a tough question.
So what does all this mean for Wendy's? And for anyone who's interested in the restaurant industry as a whole, seems like Wendy's is facing a bit of a reality check here. The road ahead is definitely going to have some bumps.
Yeah, there's no sugarcoating it. The economy's not doing great. The competition is intense. And consumer spending is still a bit of a wild card. But Wendy's isn't just sitting around waiting for things to improve. They're making tough decisions, like closing those underperforming restaurants. And they're focusing on their strengths, like their digital platform and their commitment to menu innovation.
Yeah, it's kind of a back-to-basics approach, isn't it? Focusing on what they do well and trying to streamline things.
Exactly. And it'll be interesting to see if it works. Will those restaurant closures ultimately make them stronger? Or will they regret it? Can they really win the breakfast battle? And can menu innovation alone drive sustainable growth in the long run? Those are all questions that investors will be watching closely.
It's a good reminder that even big brands like Wendy's have to adapt and change to survive. So, Talk Tickers listeners, what do you think? Is Wendy's on the right track? Are they making the right moves to navigate this tough market? Let us know. Head over to our website or social media and share your thoughts.
And don't forget, Wendy's story is really a reflection of what's happening in the whole restaurant industry. The pressure to innovate, the struggle for profitability, the growing importance of digital. These are all trends that are shaping the future of dining out. So keep an eye on Wendy's, but also pay attention to your other favorite restaurants and see how they're handling these challenges.
This earnings call might be over, but the conversation is just getting started. Thanks for joining us on this deep dive into Wendy's Q3 2024 report. Until next time, happy investing.